A warm welcome to all the participants, wonderful participants, and our esteemed speaker for today, distinguished speaker for today, Manoj Agarwal, who is Head of Internal Audit and Risk Management for Metro Brands Limited. Today is the 39th in the 39th session of Analytics Wednesday series, Analytics in Retail Sector. And we're very happy to have, consistently been able to hold 39 sessions series to get perspective of different speakers. As you all know, I'm just trying to do a recap that Sama Audit has been at the forefront of providing audit technology and even technology to finance professionals and forensic professionals for the last 20 years, provide training, consulting in the areas of internal audit, risk management, analytics, solutions. The flagship product is IDEA. You have continuous control monitoring LSA from London. You have got Smart Exporter from Germany, Audicon, which is the ETL for SAP. From April, we have just launched Caseware Working Papers, which is #1 in its category around the world in terms of working papers for statutory auditors, external audit, CPA firms, even for the finance departments. So Sama has, for the past 20 years, tried to bring the latest technology and support the auditors, finance professionals, forensic auditors, etc. in the country and the neighboring countries also. Now, I would formally like to introduce our dear friend and also our dear professional, Manoj, to all of you. Today's topic, which he has chosen, is very dear to his heart. So I think we are going to get enlightened by him. He is first to his education. He is a chartered accountant, a DISA, a diploma in information systems audit from ICAI. He is a certified internal auditor, a CRMA, certified risk management assurance professional from IIA. He's a CISA, certified information systems auditor from Osaka, USA. So that's his educational background. Currently, what is more important, so I'm going to read out from that he holds currently a number of important positions. From 2019 to 22, he's a member of the International Internal Audit Standards Board at IA, Institute of Internal Auditors, Florida, USA. So he holds a position at IA, Florida, as member of the International Internal Audit Standards Board. From 2019 onwards, he's a member of the training committee chairman for IA India. He is from 2020 onwards, he's on the strategic advisory board member of IRM, risk management in India affiliate. 2018 and 19, he was the president of Institute of Internal Auditors India Bombay chapter. He is a leading internal audit and risk management. He leads internal audit and risk management department of one of the largest Indian specialty footwear retailers, Metro Brands Limited. He has over 2 decades of experience in delivering assurance and advisory services to management in retail facility, BFSI industries, and prior to that, he was in a consulting firm. So I think he, more importantly, writes a blog on risk and control, which is available on toolsforgovernance.com, and his blogs are, of course, published by Isaka and IA. So he's a very well-known figure, academically inclined, as well as very active in the profession. So, with that, over to you, Manoj.
Thanks, Digji. Thank you for inviting me on this forum. So it's a very interesting forum, and you're doing a great service to us people in the industry, I'm sure, as well as in the consulting, so that they are able to get the knowledge from the various individuals. So allow me to share my screen. Okay, is my screen visible?
Absolutely clear, Manoj.
So great. So thanks everyone. I hope that we would have a meaningful conversation. So let me just quickly start. So this is the topic for the today. So Divji has given a much more elaborate introduction, so I will skip this slide. Now, according to me, this is one of the most important slide for me. This is my personal risk management. So this is disclaimer. So let me read the verbatim. All the content of the presentation constitute the opinion of the speaker and the speaker alone. They do not represent the views and opinion of the speaker's employers, supervisors, nor do they represent the view of the organizations, businesses, or institutions the speaker is or has been a part of. Some of the situation that I mentioned may not be true, and the identities of any parties involved have been disguised, and images may be subject to copyright. Though I have not used much images, but let's say this image, it will be subject to copyright. So with this is my personal risk management. So whatever I'm saying, it's my views and my views alone. They did not represent the views of my organization. I'm not the official spokesperson. So friends, this retail is all about detail. So retail is detail. If there is no detail, that retail is likely to be closed down. In retail, the labor is cheaper than your tools. Retail means personal service. Personal service means customization. So when you go to a hotel, a restaurant, if waiters calls you by your name, saying, Mr. So and so, sir, you like that. When he says, sir, last time you have taken this, you further enjoy this. It's like based on your past preferences, I would recommend that this particular dishes. You become very happy, and if the dish is according to your expectations, you will be highly delighted. All this is all part of the customization. In retail is all about detail. People are doing the same thing repetitively, and great companies does this repetitive jobs efficiently and better. So these are I would say various attributes of retail. So retail is always interesting. So in Hindi there is a saying, "Nazar hati durghatna ghati." In retail, nazar hati nuksan ho gaya. So you need to be very alert, whether it is on the shop floor or whether on the back office, and especially as an internal auditor, you need to be your toes because retail has huge data. So I will straightforward jump into the kind of analysis we do in retail. Now I'm not see, so we are not using any tool. Tool, if used, are the old plain vanilla Excel, or it can be SQL queries, or it can be some customized report, or it can be something scheduled from different applications, customized build. Because one of the philosophy I'm following is if the tool is within the internal audit area or domain only, then only the internal auditor is going to be the user. However, if the tool happens to be a tool used by the business or can be used by the business, then the tool would be that whatever we are doing can and may and can become part of the internal control system of that organization. So let me straightforward jump into the various types of analysis that can be done in retail. And let's take any organization. So for the sake of simplicity, let's take Shopper Stop. So uh, in this presentation, I will try to avoid my employer's name. So I will use some our competitor or some other retail company's name. So let's take Shopper Stop and let's assume they have say 100 stores, and let's assume they have a sale of 5,000 crore in a year. Now, what will be a average bill size? Let's further assume the average bill size would be 5,000 rupees. So if average bill size of rupees 5,000 rupees, so in a year there would be at least 10 million invoices. When I'm saying at least 10 million invoices, because for number of invoices, they would be getting cancelled, getting reversed, they would be doing something else. Credit notes are being issued. There are so many things which should be happening. Now, so with this average bill size of rupees, 5,000, it gives us approximately 110 million invoices. Now, let's further assume that average bill value, average item per bill value is 5. Then 10 million invoices, which would have 50 million line items. You would be saying a shopper stop is a large one. So you can decide to take a small one. You know, uh, let's take this jumbo vada pav, and let's further assume he is giving bill for every vada pav that you are eating. You can do your permutation and combination. So retail has lots of data. Now, the first item, the masters, is the masters as in sync. For example, your item master is in sync. In retail, you would have your accounting system, you would have your phone system, POS system. If you are available online, and after during this pandemic, and now there is a huge emphasis on e-commerce, so you may have your own website, or you may be available on marketplaces. Uh, for food items, the marketplaces would be Zomato, Swiggy. For non-food items, for for durables, household items, grocery, it can be your Amazon, Flipkart. So you can have your own website, you can have marketplaces. So at all these places, you would have your item master. And is your item master in sync? Some of you would be thinking, if none of you have ever audited a retail organization, then some of you would be thinking, hey, what is this thing what is the big deal in item master in sync? You may have very limited amount, let's say 100 SKU, 1000 SKU, 5000 SKU, 10,000 SKU. Now, in retail, you have number of shops, number of systems. You need to have something need to be in an ERP system, or you need to decide you don't want this item as in ERP. You will be only taking your sales. So, based on if somebody's in the retail, they would be able to understand that based on the underlying environment. So, if you have your item master in your ERP, if you have this item master being taken to your POS system, and then it is very important to compare these two items, especially in last 5 years with the advent of GST, with the advent of so many items which are being subject to concessional rate, reduction in rate, increase in rate. You can understand the complexity. Now you can further understand the complexity if you believe that we cannot afford to close our shops even for a single day. So any change in the rates, any change in the exemptions, you need to do it overnight. And my dear friends, your ERP systems are not geared towards mass customization of changes in the masters, because you need to do maker and shaker and lot of other activities. Now, in retail, there is something called the upper PD and downward PD. What is this PD? PD is price differences. So you keep doing, you keep increasing the price, keep decreasing the price, and you need to keep a control over that. If you can do very easily in the past, but to ensure that you are doing consistently across all the platform, all the channel, it requires a lot of efforts. And the tax. So in this item machine sync will also cover your item number, MRP, express, etc., etc. There are a couple of one question. I will take that. at the completion of and at the end of this slide, is your PO is being issued at the item master rate. It's such a simple thing. I don't think that this is this is getting tested, but it is of major concern in a large number of industries. But in retail, where you need to be highly price conscious, you want to ensure that you are able to deliver right item at right prices to the consumer. So this becomes very important. If you are in a position to extract some discount for under whatever reasons, then why not? And is your sales happening at the item master rate? So let's take the example of Shopper Stop. You are changing something uh, in your ERP. Is this ERP is getting synced with your POS at the right time? Is your POS is centralized? It is POS is distributed? Then is this change in the item master is happening across your various platform? So I have a question. Is there any data analysis tool by any big four for retail? I know they are working on this kind of tools. So my dear friend, I can only say this. There are tools available. For example, Dipchi mentions one tool which is sold by him. But at the same time, do you believe two companies in the same industry, they are having the same system? They may have similar system, but they are following exactly identical processes? I don't think so. So the various items I'm covering here can also be covered in any other tool, but I don't think there is any ready-made tool, because any tool need to be customized for the company for in a given industry. Okay, great. Now again on the master, is your vendor master is complete and is in sync? For example, PAN versus GST number versus place of supply. Now now, you may have thousands of vendors, especially if you are in a trading kind of setup. You can have thousands of vendors, unless you are manufacturer and you are a retailer who also manufactures the thing that they are retailing. So your vendor master is complete in sync. This is as simple as your PAN versus GST versus place of supply. Today, number of manufacturers who are large manufacturers, they can supply you from any number of their facilities across India. And based on whichever state they are locating, or whichever plant they are going to supply, either their GST number changes. Of course, it is not changing that much extent, but it changes based on the state. So you need to keep tab, you need to have appropriate control to ensure that your PAN and GST number vis-a-vis place of supply, they all are in sync. So in many cases, you may also have vendors who don't have GSTs. And this look up your employee PAN versus vendor PAN and GST. Now this is your also a fraud related control or conflict of interest related control, where you're doing your employee PAN versus your vendor PAN. And in a retail setup, unless it's online, in a brick and mortar, you have a large number of employees. Now, another thing is look up your employee PAN versus GST on the GST website. This is I won't call it is a fraud, but at the same time, it's a conflict of interest related control. In Indian organization, we don't permit our employees to indulge into any other business if the person is an employee. So he or she may not be supplying to the organization, but he may have a side business, so if he's focusing there, he may not be focusing on the work in the organization. And look up your employee phone, email versus vendor phone. email versus members in loyalty program. Now, uh, your vendor may be a friend, and it is the ultimate beneficiary may be that employee. It is quite possible that employee can be a stupid person has given, or the vendor has given his phone number and email as his her vendor's phone and email. So you need to do this kind of lookup at in a frequent intervals to ensure that such cases, if getting detected, they are being taken at a right level and getting they have been dealt appropriately. Changes in cost and MRP. So today's ERP system. When I say today's ERP system, of course, any industry strength ERP system, for example, the SAP, it can take care of cost as well as MRP. But for that, you need to pay a huge bomb for licensing. You need to also balance your cost constraint. So so generally, a typical ERP system will take care of cost. For them, MRP is only an information because for accounts, MRP may lead to some revenue, but what is getting reported is the cost. So any changes in the cost and MRP, you need to trace it whether it has been done by the authorized person based on the appropriate authorization. And active inactive users in ERP, POS, and other system. Now, this particular thing is especially from the POS. If you have a all India presence, you would be hiring locally. If you're hiring locally at a store level, then you need to create certain IDs in the POS. And in retail, if somebody doesn't like to work in a company, they run away. So how good or how strong your in and out of service system or control over employees, that will help you to understand with this kind of analysis. Item with more than one supplier. In retail, when you ask somebody to manufacture something or when you ask get something, if unless it's a commodity business, you can get something from more than one supplier. But if it is a specialty business where you are getting something from one supplier, generally that supplier only supply the entire thing because you don't want to mix and match. Because if the other vendor has not that quality conscious, even by 1%, it can lead to huge issues, and you won't be able to understand. Okay, should I catch hold of vendor A or vendor B? So item with more than one supplier. So in retail, this is also an analysis getting done where an item has been manufactured by more than one supplier, because you ideally, in ideal scenario, when supplier number two is supplying that thing, you are not asking the same thing from supplier one. So if you have an active item which is active with more than one supplier, it is something which you need to explore. Just 1 second. Yeah. And sales. Then sales like ratio of invoices cancelled. What is the ratio of invoice generated versus invoice cancelled? If some store have a higher ratio, so that would merit further investigation why that store has higher ratio of invoice cancelled. Is it due to lack of education? Is it due to lack of carelessness, or is it something else? Cash refund to customer. Now, some often I'm seeing that the retail organization prefer to give credit note to customer and not cash refund. And as an internal auditor, you need to see that if somebody is giving cash refund, then they need to have a genuine reason, and it should not be, some sort of a fishy business. Payment receipt from staff for customer purchase. So you are going to a showroom or a shop, you are purchasing something. Now you want to make a payment. But you say, I don't have my wallet, I have my phone, I can make you payment through UPI. And I can make a payment through, let's say, wallet. And unfortunately, the business doesn't use either the UPI or the wallet. What should the salesman should do? Should say, thank you, sir, but you need to leave this material, or they should do something else. Typically, their commission is dependent on the sales made. So what they do, they offer their own wallet or their bank account, where they ask customer, sir, you make the payment here, and I will make the payment to the company. And this is getting done with the approval of the showroom manager. But you don't know. Unless you investigate, you don't know whether they are taking some money from the customer, cash, and doing some rolling, and they are saying, okay, please use this, or they are doing something else. Transaction and odd times. This is basically, uh, let's say, if one of your showroom is making sale at 2 a.m. in the night. So is this a normal transaction? I would say I don't think so, but I need to explore. Now, now let's say it's the Diwali season, and Diwali is running, and it can be Christmas season, it can be this thing, where there is a good footfall, and people are buying it. So, do you want your showroom manager to say, okay, sir, now it's 10 o'clock, shop close करने का time हो गया है, so आप लोग कल आना. वैसे, no, it doesn't happen like that. So the definite, you need to also define what is the odd time based on the 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 period of the year in which you are detecting such kind of transaction. Items sold with 100% discount are a higher percentage discount other than end of season sale. When something is getting sold at 100% discount, it means it is given free. Now, is this given free? Is this justifiable, or it is something fishy is going on? It can be, some typo error. It can be instruction from the management, or it can be some favorism. Sales return after X number of months, basically beyond service period. So some offer 7 days return period, some offer 3-month return period, some may be offering 6-month return period. But any sales which is returning after getting returned after that many months, we need to keep a track for many reasons, and one of the reason is the GST. But at the same time, it's a violation of the company policies. Now it is also getting done to earn the customer delight. So it need to be handled appropriately, and the employee discount. Some company offers, for example, I know there are companies which says, okay, we offer unlimited employee discount, so they can purchase anything at this discount. Some company says, okay, we offer a discount, but we are offering this much of amount. Somebody says that, okay, we are giving discount, 2 times, 3 times, 5 times in a year. So whatever is your company's criteria, you need to taste that, whether anyone is taking more than the desired benefits. And mind you, all these types of controls, if you try to build in your POS system will become slow. So you can't afford to have this kind of system, this kind of controls in your POS system. Sales money.
May I ask you a question?
This is one of the very important item.
Manoj, may I ask you a question?
Yes.
If you go to the earlier slide, the payment received from staff for customer purchases. Now, how can one identify whether this is teaming and leading going on, rolling going on by the staff, because the shop has authorized payment to be received from staff for genuine customer purchases. So how do you build in an algorithm to actually detect this when you are present across the country when you have number of retail outlets? How do you analyze that?
So any approval which is not in the system, you can't build an algorithm. But what you can build an algorithm is sitting at the HO when you're doing this kind of analysis, okay, I have this number of shops where I'm detecting this kind of anomalies where let's say the person who's making the payment happens to be our staff. So how many invoices, which kind of stores, how many say employees, what is the contribution of sales from this employees versus overall sales. So all this will lead to will give you some insight, and based on this insight, then you need to deep dive. Now, if you come across some stores where you are finding that 10% of the sales is coming through in this mechanism, vis-a-vis your average, say average contribution of such sales is less than 1%. We will definitely like to explore why or what is wrong in that store, which leads to 10% of your sales is coming from this kind of transactions.
Right.
So this is basically, so I won't say that this will pinpoint, this will only give you a red flag for further exploration.
Right. Thank you.
Then sales money. Now sales money, I think I'm going slightly slow, so I need to little speed up. Now sales money, this is the, I would say it's a hard, if it is not getting monitored, then I believe the only solution for the organization is to buy a lock. So for example, when the cash collected is deposited next day, now you would be saying, what is the big challenge in this thing? Now, the biggest challenge is if you are late in going to the bank, it is quite possible the bank has exhausted their deposit limit. Just like money in safe or money in hand, kind of money in transit insurance. Bank also have some insurance, and one of the insurances is what is the amount of money they can keep in the safe. If you are late and if the limit is exhausted, you won't be able to deposit cash. You will be asked to come next day. Whether the credit card collection has come in time, bank wise, TID wise, TID is terminal identity. So you need to do. So let's take the Shopper Stop 100 stores. They would say we would have 10 counters. So 100 into 10 counters, 500 machines, and every machines would have one Master card, one Visa card, one Amex, and one say Diners Club. So 500 into 4, 2000 IDs and daily transaction. And you need to do that. Now, whether discount given is authorized, so somebody is giving some discount. No, how do you know it's an authorized one? Whether the gift coupon vouchers were appropriately knocked off. So you are receiving gift GVs, then this need to be appropriately knocked off in the system. Now, this form is single customer income compliances, cash collection greater than 49,000 for PAN. So if you are collecting cash 50,000 or more, you are required to collect the PAN of the person who is giving you that cash. Now, cash collection greater than 2 lakhs rupees. You are not allowed to accept rupees 2 lakh in cash. It's a violation. If you do that, this is liable to penalty. So again, take a Shopper Stop example, and 100 stores, there are cashiers which is doing it. So are you going to say your customer, sorry sir, my company has asked me not to collect this. So it is quite possible some enthusiastic salesman or cashier can collect it, or they will decide to do something to make it more I would say digestible. Stock. Now this is very simple thing, but it is very important. Whether all the dispatches from warehouse has happened in time. Whether all the dispatches from warehouse has been received in store in time. Whether it is hanging in the goods in transit, and if they receive on time, whether they are recording, they are doing a GRN in time. Whether the stocks are performing self count based on defined frequency. As an integrator, you're not going to go every month and do the physical count. You want that system to be inbuilt in the business, so they expect you to do self count. Whether the stores are being subject to physical count as per the defined frequency, whatever is your frequency. Stock in transit monitoring, the aging, stock limits review, showroom wise, category wise, assortment wise, any other type wise. Now this become important. It is quite possible some of the store may have some inventory which is not getting sold. They may have inventory of only one type and they are not getting sold. So and if you don't do this kind of analysis, quite possible someone somewhere sometime have done some error of judgment and you have some excess inventory lying in some store which you are not able to sell. It is quite possible that the demand of that inventory is there in some other store where the inventory is not. Stock versus open to buy analysis. Open to buy is this is the limit given to the various buyers what they can buy based on the trends in the sales and the closing stock which the company has. So you need to keep analyzing it. Otherwise, you will be saddled with excess inventory. Buyer-wise inventory analysis of end of season sale, rock bottom sales, dead inventory, not sold inventory. Now, all this is important from the perspective, do we have some outlier who's whatever the person is purchasing is coming out as the maximum, which is coming as an outlier. Purchases, vendor quality analysis, timely delivery of goods, defective return ratios, PO issues, closure, reopen, edit analysis. So this various analysis helps you to understand whether your purchase system is working appropriately or not. Now, vendor quality analysis. Now, if you do, so organization has something called vendor performance appraisal. But when is this getting done? That would be getting done, once in a year. And once in a year is too late in the retail kind of scene. So you need to keep doing your vendor quality. What is the ratio of quality pass, quality reject items, whether they are able to deliver goods on time. Packing material. Now this packing material, you can also lead it, connect it with the your customer service. So for example, packing versus bag versus invoice comparison. Packing bags per bill. You are going in a showroom and you go to the cashier. Okay, guys, I forgot to carry this thing. Can you give me a bag? Now, some will say, sir, sorry, we can't give you as per the company policy, and you will say, what nonsense. Uh, this company is so confused. They are not able to give me 1 2 rupee bag, and either they are ready to sell me the 2 rupee bag. Wherever some other would be able to say, okay, sir, you're our old customer, please take this bag. And also packing bags per bill. Now, it is quite possible you may get 100 packing bags in a single bill. Now, packing bag also cost money. For example, 10 rupees per bag. So 100 bags is 1,000 rupees. You will say, what is 1,000 rupee as compared to 5,000 crore? But this is indiscipline. Invoice with no bags. So if you're getting audited, you're doing a mystery audit. So as part of that, your audition processes say you need to offer back to the customer, and somebody is not offering that bags because they want to save money on bags and getting hit on the mystery shopping, getting hit on the customer sentiments. Negative balances. Now this is though I've included in many places, this is not considered as a big issue. Because as long as the inventory is there, they're getting sold. It's only a matter of stock taking, and this negative balances will get adjusted. And especially in packing material, there can be a number of reasons. Your packing bags comes in all shapes and sizes: small, big, medium, large, extra large, jumbo. So you need to define what you want to do it with the balances. Now, GST, e-way bill generated versus invoice greater than 50,000. Now, some of the retailers, they have integrated their POS system with the e-way bill generation. So whatever is getting, whenever they are raising an invoice greater than 50K, then the e-way bill is also getting generated. Now, let's take further. Now, whether they have done this integration with their ERP system, whether they have done this integration with their e-commerce or own website, I'm not going into marketplaces. And if they are doing any stock transfer, from warehouse to stores, whether this integration is there or not. There can be some more categories where this integration is there or not. So if it is not there, there is a huge risk that the goods can be, if detected, can be detained and need to pay penalty. ITC claim in books versus ITC shown in the GST portal. I think this is getting more or less stabilized. No, ITC, sorry for the typo. ITC shown on the GST portal, not shown in the books. Now, this is a good indicator of your accounting, the deficiencies in the accounting processes. Of course, it can also be due to some errors by somebody, some seller who has given wrong GST number while uploading while filing the return. E-invoicing is on the portal versus invoices in the books. So e-invoicing is mandatory. You need to get a reference number from the portal, but at the same time, you have no control on the functioning of the portal, and many times you have no control on the internet connections. So you need to reconcile that, because at the end of the day, the liability would be calculated based on the invoices on the portal, and any differences, anything would be highlighted, can be flagged off as an issue. GST claim versus GST shown in the books. This is very simple. Now, data's aging. Now, you need to do it channel wise. And when you do channel wise, you will come across some interesting trend, especially with marketplaces. So anyone you have some experience from marketplaces, you will realize that every marketplace have their own system. Customer is free to return. They can return any point of time. Then whenever they return, they can return, fake goods, wrong goods. So when it is coming to the marketplace, coming to you, you may get something else. There are so many things which can be happening, and you need to do a lot analysis, lot comparison and reconciliation to ensure that your data's aging makes some sense. Data's with credit balances, creditors aging, channel wise, credit data's balance, and vendors loan. But possibly you might be giving some loans to our vendors. So these are typical thing, but the most important thing, you need to do it channel wise. Retailer means general retailer means you are selling on the spot. You are not giving credit. If any is given through some other party. For example, if I am a retailer for LG, say washing machine, I'm not giving any credit to my customer. This credit would be given by the third party. It can be the credit card guys, or it can be an NBFC. So I don't have any rule. But if something is there, I need to keep monitoring this thing. Rental and deposit. Now, rental constitutes a very large portion, a large percentage of revenue in any retailer's books. So this is very, very important item. Rent and deposit comparison, simple comparison for wherever you are paying rent, whether there is any deposit is there or not, and vice versa. So if rent is there, deposit is not there, that means there is something quite possible you may be paying rent for a non-existing property. If deposit is there, rent is not there, that means you're not able to recover your deposit on a timely basis. Deposit recoverable for shop closed. You're closing your shop and you need to empty that shop, but the deposit is not coming on time. Generally, it takes 1 month to 6 months, and a typical landlord wants to cut that deposit under various aids. Deposit recoverable shop cancel. You were planning to open a shop, you made a deposit, and that shop somehow got stuck up. It can be any reason. And one fine you decide, hey, nothing is moving, let me cancel this shop. Now you need to recover that money. Deposit for upcoming shops. Now you this is so you will say this is all one way or other way, all deposit shops. Now this is a good indicator whether shops are being open in time or not. Meter is, at the end of the meter is when you approach someone that, hey, I want to open a shop, he will say, "Okay, great, thanks, let's discuss the rent." Then he will say, okay, I want a fit out period. They will say, okay, no problem, we give 30 days fit out period. And you are not able to open your shop even after 60 days. Mind you, it can be 15% to 20% of your revenue, or estimated revenue from that shop. So, and if it's a minimum guarantee, there's a huge money you will be paying for not opening the shop. So there is a cost which is incurring and not generating any revenue. Agreement expiry tracking. So in retail, the what is the most important thing in retail is the location, location, location. What if because of some stupidity you are not able to renew your agreement? And the concerned person will be fired. So this expiry is getting tracked, and number of people s- take up this renewal. Some are taking it 6 months before, some are taking 3 months before, some are taking one year before. So it's just very important because if you lose that location, you are not going to get that location. And if you're getting that location even after you lose that location, then there is something wrong with that location. Loyalty programs, whether the earning points earned are as per the calculation as per the program, whether the points burned is as per the program. I would say, what is a big deal? My dear, the retailers are kept coming out with the various schemes. Double point, triple point. If you do this, you will get this extra point. Your Christmas thing, Diwali thing, 26th January, 15th January, and number of things, Founders Day. So they want to give you some discount so that you come and do some shopping. Frequency analysis for identify fraudulent transactions. So every industry, and I would say every company has their own categories. As an interpreter, you need to identify what is the most relevant one. For example, frequency analysis. Now, if you have a normal customer and how many times that normal customer is going to buy a washing machine, he is going to buy that washing machine once in 10 years, not going to buy a washing machine once every month. An employee contact number versus loyalty program member comparison. Conversion of walking into loyalty members. A company says keep please try to convert walking into loyalty customer. Make them part of the loyalty program. And some enterprising guy would be saying, okay, I will make everyone the loyalty member. If the person is ready to become one, great. If it is not, I will book that walk-in customers invoice into the loyalty program members invoice. Then valuating net earning of a customer. Vouchers redeem more than once. Now this voucher redeem more than once is you give a discount coupon, you give gift voucher. Generally nowadays everyone tracks through a number which can be done only once. I remember once I was trying to book a flight and it was supposed to be one flight discount coupon. And what I have done, I have pressed I went back and come back and booked 4 tickets on the same discount coupon. The loyalty points earned at more than one store in a single day. Now, this may not be a problem depending on the organization, but if somebody is earning loyalty points from more than one store in a single day, that means the person was present in 2 stores in a single day, and those stores can be in different cities, which is generally not possible. A reconciliation between POS versus loyalty system. Uh, so some manages integrated loyalty system, some manages third party, and some manages totally disintegrated loyalty system. Depending upon whichever system you are doing, you need to keep analyzing whether these are in sync because the customer may be buying, returning it, may be buying 2 items, maybe returning one, then buying another one with a credit note with a higher amount. all those plus minus need to reconcile so that you're not losing out on the points. For example, so certain points are equivalent to certain points are equivalent to 1 point is equal to 1 rupee. Some points may be equivalent to 1 point is equal to 25 paisa. So whatever excess point is there, it's a loss of money. Insurance, whether the insurance company have been intimated for increase and decrease in stock. Again, let's take Shopper Stop, 100 stores, there would be addition, deletion. So all those items need to be also updated, coupled with the seasons. For example, Diwali season, so they will have more sales, more stock. So all those increase and decrease need to be updated. Otherwise, so you can have two kind of scenario. If you don't do that, scenario number one, in lean season, you will be paying excess premium because the stock is less. And in the peak season, your stock can be underinsured because your stock would be more than the insurance limit. So if something happens, you will lose, money. Whether the exemptions for insurance is still valid. Cash in transit, cash in safe, contractors, all those policy, etc., etc. Now, let's put yourself in, say, in August, September 2020, and see yourself again in August, September 2021. Look, there is a huge increase in the sales. The economy is booming, picking huge amount of sales, record sales. And if you don't revisit your assumptions timely basis, it is quite possible you may be earning, for example, your stock in transit, stock in cash in safe policies of 20 lakhs, but your cash collection is increased to 40 lakhs. So this additional 20 lakhs at loss. If something happens, you're not going to get that money. So you need to keep revisiting your assumption for insurance. And I think this analysis gives you a good idea what is the maximum cash you have, which will give you some idea. And insurance claims. Now I think I've still exceeded time. So if you have any questions and you would like to if you want me to discuss something more about that, please let me know. If there's something which you think I should have covered but not covered, do let me know. I know I have not covered the tool, but you can use any tool. It's all the application which is important.
Thank you very much, Manoj. I think it's been a great presentation because you have gone slowly, methodically, giving out each and every business objective, process objective, audit test, which one should look at when one is looking at a retail store, a retail chain, whether they be in any business. All these things which you pointed out, all things which you explained are most relevant to ensure that there is no revenue leakage and the process are working in a very robust fashion. So I think there's one particular question which is there here. One is, sir, is there any data analytics tool by any big four for retail? I know they are working on these kind of tools. So I think Manoj, you'd like to reply to this, please?
Yeah. See, there are tools like IDEA, then ACL, Arbiters, SQL. Now, any big four, when they will create a tool, so what they are going to do, they will put a front end and they will put a back end, and they will be running certain queries and putting into certain shapes. They might be using Tableau, ClickView, Power BI, and they are going to present that tool. So at the end of the day, all these are standard. I would say these are the standard tools. You can take Power BI, ClickView, Tableau. They are very good visualization tools. And you take IDEA, ACA, Arbiters. This will help you to do the data crunching. If you yourself is smart, then you can, if you have access, you can directly query SQL and make queries which will generate the output based on the various queries. If you're more smart, you can also see that these queries are getting executed. The output is being mailed to the concerned people. But see, all these are a lot of efforts. If you have a dedicated IT team to help you in this, then you can do that. So any big four, if they are working on any data analytics tool, I know uh, uh, EY sells a solution. I'm sure Deloitte, KPMG, PwC, they might be also selling a solution. And that, for example, EY solution is built on Power BI. So there are tools available, but it's all custom prices. So you have to ask them for the pricing.
I think Manoj has rightly put in. I'll just chip in here because of the knowledge that we possess. That since these big four are mostly headquartered in out of North America, out of US, so you will find that, as Manoj rightly pointed out, they are using a plethora of tools. They practically use all the tools, and they may use a particular tool for a particular assignment. And based on the tools, they build their solutions. And that is, the front end, the solutions, the business objectives, the knowledge base which they have of a particular industry around the world. They use that knowledge base for delivering a particular solution based on all the tools, or some of the tools which Manoj talked about. So, and those tools have, of course, come from North America because they are based out of North America, and they have made a particular standard philosophy to be delivered around the world. There's one question. One more question is relevant to retail industry. Manoj, is gross margin analysis is critical in retail audit and impact analysis due to scheme discounts, clearance sale. So, any comments you'd like to?
So I would say, see, it all depends upon the company. For example, this gross margin analysis. Now, how this gross margin is coming up. I'm talking about the SKU level. So you have a cost and there is an MRP. Who's deciding this MRP? So cost, I will say, is a factor of many things, but who's deciding that MRP? So if a responsible person is deciding an MRP, so we know what is the gross margin at SKU level. Now, see, now we place a gross margin at a channel level or at an SBU level. Now, this would be basically your gross profit. Now, this would be again dependent upon so many factors. For example, I can decide to hire let's say an HR, business HR for that particular vertical at double the cost. So who's making that decision? It's the management making that decision. So I would say that this gross margin analysis definitely is critical, but at the same time, it is part and parcel of the entity's MIS system, which gives them what is the gross margin they are earning. Now you can also do this gross margin analysis at the showroom level, showroom level profitability. Now, if somebody is not doing that, as a business, now I'm not talking as an auditor, I'm talking as a business. If I'm not doing that analysis at a showroom level, then quite possible I would be running, I don't know how to do my business, and I would be running loss-making showroom. Now, any showroom that I'm opening, new showroom, that showroom is not going to do well at the initial couple of months for a very simple reason. My customer may not be knowing that I exist there. Or even if they know, then they would be already doing some sales somewhere else, or I need to create a fresh campaign in that particular locality to invite the people, prospective customer, to come and do the shopping. Now the scheme discount, clearance sale. Now in many companies, what they do, there are companies and there are companies. In generally retail company, what they do, when they make the projection for the year, they also decide what is the amount of sale they want from clearance sale. Now it's a factor of the uniqueness of that product for that particular company. See, it can be, let's say, shirt, it can be footwear, it can be umbrella, it can be anything else. So if you know that I have a very limited period, for say 6 months, in which I need to sell or I need to discard. In that kind of scenario, if you're not able to sell at full price, then I am going to discard all my inventory, 100% my inventory, whichever is not sold in clearance sale. And if you believe that you will be able to reuse that inventory and can sell it in the next clearance sale, then you will be going by your budget and say, I don't want, let's say, more than 5% revenue from clearance sale. Of course, somebody would be saying, I don't want more than 30% revenue from clearance sale. It's all company dependent. And this scheme discount, again, so you are giving this, you're planning in advance and then give the discount. If you are not planning in advance and start giving discount, then it is going to be a problematic thing. And retailers become very smart. They give discount on a particular line. They don't give discount on the entire 100% of the inventory in a store. They don't do that. You will always find, even in end of season sale, you will always find there is a fresh stock available where there is nothing is there. So they are very clear on the SKUs or the inventory on which they want to offer clearance sale, scheme discount. So there's another question: which tool do I use to carry out my audit? So my dear friend, it's a plain, simple, old vanilla used by the 100% of the auditors of the world, Microsoft Excel. Additionally, what we do, so we have an ERP system. So whatever analysis we do, whatever report we want, we raise requests and get that report developed, and also the frequency defined. In that frequency, the report should come. We have a very active IT support team. So whichever things are not in ERP, we ask them to create those SQL queries and create those reports. Once the format has been defined, it's all a matter of the frequency.
Thank you very much, Manoj.
Another question.
Yes, while analyzing rental expenses, could you please suggest some audit steps to validate or verify that geographically store locations are appropriately spreaded to attract new footfall customers? Okay, I think I have Manoj. Please.
So my dear friend, see, if you have, so let's say you have stores in 4 metros, and then you 4 metros or 6 metros, and then you decide to open another store in some city, and you are very popular one. If you're very popular one, this 6 stores would be serving customers at other parts of this part of the India. The moment you open another store in another part, it will lead to some bits of cannibalization of your sales. The people living in the vicinity of that store, they are not going to go to your other stores and buy it. So you will always be facing some bit of cannibalization. Now, geographically, store locations are appropriately spread to attract new footfall and customer. So this you can do only a post facto analysis. So now this new footfall. Now, a large number of companies have different systems of footfall. So let me just give you some idea on this footfall. See, customer, it is very easy. If you generally companies, what they are doing, they are asking customer to be part of their loyalty program, or they ask the customer to give the mobile number on which they are going to send the invoice. So they have some bits of idea whether the customer is new or old. And if they have enough data for few months and few past purchases of that customer, they can understand which is the store where this customer is likely to purchase next time. Okay. Now the new footfall. Number of places this footfall is getting counted by a salesman. So the person is sitting on the counter and is entering who is coming into my showroom. Now somebody would be counting who is coming in the showroom and looking at my shelf. Somebody would be counting who's coming into my showroom, looking at the shelf and picked up a product. These are non-standard processes. And there are techniques available, but all these techniques cost a good amount of money. Somebody would be installing, some counters. If you have visited, let's say, Chhatgad station, there is a counter. Once you cross that, if you actually notice if it is working, it will increase one. It will increase the count by one. You will also see similar counter in the malls and in the theaters. So it's a very simple thing. So there is a door-like device. You need to cross that threshold. Once you cross that door, that device, it is counted as one footfall. Now, if you decided to play merry-go-round 10 times, it will count 10 times a footfall of you. Now you can have some other kind of machines. There are also now camera-based machines. So there are so many other kind of technology which is available. So what you can do is you can take the count and do some analysis. This footfall you can only do analysis whether there are enough numbers of footfall or not. Once if the footfall is there, then what is your conversion ratio? Conversion ratio is what out of how many prospective customer has come inside your store vis-a-vis how many customer has purchased the item. So this conversion ratio, you can only do that. And if you believe that though I open a store which is too nearby and my customer from showroom A is now going to customer showroom B, is you're cannibalizing your sales. Now, what is the healthy ratio? It totally depends upon the type of business that your organization is running. But you can start with the ratio, which is the highest ratio in your store vis-a-vis what is the lowest ratio in your store. That will give you an idea whether the geographical trade is appropriate or not.
Thank you, Manoj. Thank you very much. I don't see any further questions. So on behalf of Sama Audit Systems and Software Private Limited and personally as Deepji Singhal, I would like to thank you, Manoj, for accepting and to be with us and to share your experience, the practical experience, which set the tone, because you actually shared what one should look at in a retail chain. One is auditing a retail chain. So a retail chain of stores. So with that, thank you very much once again, Manoj, and thanks very much to the wonderful participants who are with us. Next week, on 9th of Feb, we meet again for the next episode of Analytics Wednesday, where we'll have Siddheshwar Balla on bot enabled remote internal audit. So looking forward to all of you to join in next Wednesday. Thank you very much, Manoj. Thanks a lot.
Thank you.